Nitin Rakesh, CEO of Motilal Oswal Asset Management Company, has joined in. Morning, Nitin. There's been a lot of talk about the next 3-4 months being quite sticky economically for the world, and maybe in India too we might see a little bit of sluggishness. Do you see that holding the market back, or can the market move ahead regardless?
Morning, Udayan. I think as we've been talking on the show, it's a fairly interesting position globally as well as domestically in India for us. I think while people have had their concerns around the recovery in the Western world, especially the whole talk of double dip, I think at the same time, we've had a fairly strong economic, data coming out of our local markets here. So I think at this point in time, the way I see it is especially given the very, very low interest rate environment in the Western world, which is likely to stay on that way for a fairly long period of time, I think that's actually fueling a fair amount of search for growth and arbitrage opportunities globally, and I think that's likely to keep our markets fairly buoyant. I don't think we should worry about what's happening in the U.S. much more than they need to worry about it. So I think given all that we've heard over the last 4 or 5 days, coming out of the U.S. Fed, coming out of the economists that focus on the Western markets, I think we are in for a fairly strong flow environment, and I think in that flow environment we will always have a positive bias to our domestic markets here.
Nitin, hi, morning. If indeed we do see some sort of minor correction because of what's happening across the globe, how protected do you think the downside is for this market?
Morning. I think as I've been saying on the show, we've had a fairly strong positive bias, even though it looks like we've been in a range, but the range is actually constantly moving higher, by about 100-150 points on the Nifty, almost on a every other month basis. So I think every time we've seen a correction, we haven't really gone above 5-7% from the recent highs. This time we went down by about 4%, and we are pretty much within 1% of the previous peak again. So I think downside continues to be fairly limited in our view, no more than 5-7% at a given point in time. And we withstood a fair amount of global shocks, whether it was Europe, whether it was the Chinese concerns, or more recently back into the US. So I think it's been a fairly strong environment for us where every dip is seen as a buying opportunity. I think given the fact that the markets are running fairly high pessimism, it was unlikely that it was actually going to fall much more than it did. So again, to be a contrarian, as I've been saying at least over the last few days, there were more people looking for a correction, and really corrections don't happen when those kind of environments are existing.
What about Reliance, Nitin? Because that's the one which is disappointing the Nifty, and corrections are generally triggered by that one. Do you see Reliance having reached levels where it should be picked up, or do you continue to see it as an underperformer?
I think it's clearly a value stroke contra play. There are obviously some concerns in the very short term around the level of debt or where the growth is going to come from. But even if you look at it from an FY12 or FY13 basis, it's clearly trading below its historical mean of around 15 times price to earnings. Obviously, current year it's around 10. It's around 15, but it should really be 15 forward earnings. It's clearly trading much below its historical valuations. It's clearly a value play. The bet people need to really make is how quickly they can start making the EBITDA margins from their shale gas and the other gas projects. And I think, believe it or not, if the market stays buoyant, it's only a matter of time before people start focusing on where the value is. And this is going to be clearly one of the stocks where they will find value.
Does the telecom space look attractive to you now, Nitin?
Again, telecom was a contra play. I think it's beginning to become a mainstream play again. Given the fact that we've heard even from the government some indications about potentially ending this price war and repairing the balance sheets of companies, giving them an option to return their licenses, and not really letting them trade the license, I think it really means that the worst is clearly over in terms of what the market saw as bidding wars and price wars. So I think it's clearly everything was in the price. We've seen the sentiment recover a fair amount over the last 4 to 6 weeks, and I think nothing much has changed fundamentally. It's just a PE re-rating that has happened. So now we need to see how everything gets followed up by actual earnings and growth momentum.
There has been some buying interest that has resurfaced in the entire commodity space, Nitin. Does that look like an attractive opportunity now going into the longer term?
I think a large part of that is really coming out of the fact that over the last few days we've heard the US Fed talk about doing what it can to prevent the double dip. What that essentially means is that the US is going to continue to think of ways to stimulate the economy, in effect continue to print more dollars, in effect rebasing the dollar. And I think a lot of that rebasing impact is coming into the commodity cycle because commodities really appreciate when the dollar depreciates. So I think it looks like an attractive play, both the entire global commodities, metals pack, and at least from a medium-term perspective, it's something one needs to be very cognizant of. How it plays out in the longer term, there are too many variables for us to predict, and I think at best, people have to take a trading view on this sector rather than a pure investment view.
Nitin, what about this whole construction space? I mean, that space has got smashed up quite a bit. Names like Hindustan Construction, Punj, IVRCL. Any particular worry which has reined in or sparked off this underperformance?
I think it's primarily to do with the quarter-ending numbers. They were pretty disappointing, primarily on account of poor execution, environmental delays, and so on and so forth. So I think the confidence level in the sector is running a little low. Cap goods is still a little better off than construction. So I think we need to really see some follow-through action on the earnings side, even the order books and all seem to be fairly good. But I think that's really what's keeping the markets a little worried about the sector.